welcome back, and joining me for a closer look at what's played out on the market scene today is Uvaal Singh from Sasfin Wealth. Thank you so much for your time, Uvaal. I think we've had actually quite a good week on the JSE, particularly as we kick off the month of June. I think we've had more green than red this week. What have you made of market movements so far?
Hi, Zanati. It's a pleasure to join you today. And we saw quite a bit of green on the screen today, and it follows the theme for the JSE this year. We're closing in on that 100,000 point mark.
Ooh.
And, just to speak to today, the core release was the SA PMI numbers out.
Yes.
And it did paint a mixed picture of the private sector economy. The PMI number slipped to about 50.1 points in June. So just about above the 50-point growth level. But we did see output numbers shrink, business confidence drop to the 4-year low. And this is all ahead of the 9th of July when Donald Trump's tariffs come back into effect. But despite these weaker stats, the report also showed that firms continued hiring, especially in the services sector, and also bulked up on inventories. Export demand is still a bit weak, but some policy and political uncertainties remain a drag. Otherwise, supply chains and a stronger rand have offered some relief in recent times. But overall, the data does suggest a stronger second quarter GDP. And I do think we saw a bit of that strength in our banks today, and just the broad-based green we saw on the screen.
Well, actually, as you're talking about banks, the South African banks, I did see that Capitec came out with a SENS today, and it was based on S&P. Basically, they did a risk assessment, and it seemed that they upgraded the South African banking sector in general, and then they affirmed specifically Capitec's rating and also their positive outlook.
Yes.
What does this signal about just our banking sector in South Africa? Is it just positive news going forward?
Well, South African banks present a compelling investment case. Year to date, we have seen them underperform, and this is largely as a result of some macroeconomic headwinds that we've seen. But the SA banking sector offers attractive valuations, with many of our banks trading at discounts to their book value, as well as low PE ratios relative to global peers. And these attractive valuations are coupled with strong dividend yields, ranging between 6 and 9%. So these banks provide a rare combination of income and value in emerging markets. And they also have strong capital buffers, conservative lending practices. As we've seen from recent trading updates, world-class digital infrastructure, which is enhancing their appeal. And they're doing really well. You started by speaking to Capitec. I mean, they are absolutely number one in our banking sector. They're now the largest bank by client base, with over 24 million customers. And they've evolved from what was initially seen as a low LSM entrant into what is now a formidable fintech player. And it's very well respected for its affordability and its innovation. Its user-friendly app and low fees continue to attract high praise. And they also have a variety of rewards programs, and they certainly do appeal to the mass market, and clients are benefiting from them. Just one last thing to touch on with Capitec, they also support the SME market in such a broad way, with access to working capital, and they've also helped clients with regards to accessing vehicle financing. So it's a fantastic company as a whole, and I'm very positive on our banking sector.
And you know what? Just touching on the point that you made, that we could see stronger economic growth in the second quarter, and of course we know that is the tide that lifts all boats, and hopefully we will see that through the numbers that come from the banking sector. We're still sticking with company news that came out on the JSE. We did have Reinet providing more information on the potential sale of its stake in Pension Corp. They did name the potential acquirer, but I saw that earlier on. I don't know where the share ended. The share lost over 3%, but I mean, compared to that huge rally that we saw in the last 2 weeks, that's really nothing. I don't know. Could this dip maybe signal some unhappiness with the further details that they provided, or maybe it was just investors taking profit?
Yeah, Zanati, you're spot on in pretty much the story you've just told. I mean, Reinet's share price initially surged on the news that Athora Holdings, which we now know as Athora Holdings,
Yeah.
had made a bid to fully acquire Pension Insurance Corporation at a valuation of about £5.7 billion. And that would represent a full exit from Reinet's largest and most illiquid holding. And the news caused the discount to NAV to narrow meaningfully as the market priced in a cleaner, more liquid balance sheet. And it also the potential for a capital return in some form of special div or share buyback. But we did see a bit of a reversal in that optimism today. I believe the share finished around 3.4% down. And the market seemed to reassess the bid somewhat.
Okay.
I believe some had anticipated that Mr. Rupert, who controls Reinet, might hold out for a higher price, particularly given how long they've held PIC and the importance of that asset, given they have now sold off BAT. But the market may also just be cautious around whether the deal will actually get across the line, especially given some regulatory and execution risks. But more importantly, there's still uncertainty over what Reinet will do with the cash if the deal does go through. So there's still some uncertainty in the air, and I guess still more to unlock in that story.
All right. Well, let's cross on over stateside because we did get that big jobs report today. The US's June non-farm payrolls coming out, defying expectations. Of course, yesterday we saw that contraction in the ADP private payrolls, and a lot of people maybe thought that we'd get a disappointment on the non-farm payrolls, but actually going in the opposite direction and growing more than expected. What is your take from that, and actually what then this means for the options that Fed Chair Jerome Powell has?
Yeah, so just to touch on the reports, Zinati, we got a stronger than expected US job report, as you mentioned.
Yeah.
Non-farm payrolls rose by around 147,000 jobs. So this was higher than the forecast of around 118,000. And the unemployment rate has now dipped to around 4.1%. I did see it as a welcome surprise after yesterday's weaker than expected private payrolls data. That did raise some concerns around the health of the US economy. It did point to some potential cracks. And so then it speeds up to recessionary concerns.
Yeah.
But we did see wage growth cool a bit. That rose around 0.2% month on month. And that does help ease any inflation concerns that one could point to. And then, like you spoke to, the market then responds to this and rethinks the timing of Fed rate cuts. So the odds of a September rate cut is now down to 75% after being nearly certain prior to this data coming out.
Okay.
But we are seeing a bit of a mixed response, giving some of the hawkish voices related to higher levels of jobs in the US economy.
Yeah.
But it is reassuring that the labor market is still holding up after yesterday's data surprise in particular.
All right. Well, let us get to your stock pick for today, Uvaal. What are you choosing?
So my stock pick is Berkshire Hathaway. It's a company that needs little introduction. The share price has pulled back slightly following the announcement of Warren Buffett stepping down as CEO, despite the fact that he remains the chair. His transition has been well telegraphed, and Greg Abel will be taking over the reins, a man who's more than formidable for this role, and he's been in the company for a number of years. And it does reflect the firm's long-term standing and succession planning. But most importantly, the fundamentals of the company are rock solid. Berkshire ended Q1 with a record 347.7 billion in cash and treasuries. Positioning it incredibly well to capitalize on market dislocations. The equity portfolio within the company continues to be anchored within high-quality names. And then we still do see some net selling. We saw some in Q1, but that's just the discipline of what Warren Buffett has built with Berkshire, as well as Charlie Munger. But short-term volatility aside, the company is defined by its strategy and its fortress balance sheet. On a forward PE of 23 times, not as demanding a valuation as we see relatively in the US. So certainly my stock pick for the day.
Well, I mean, I know exactly where they can use that cash on me. Thank you. Thank you so much for your time and for your insights there, Uvaal. Really appreciate it. That was Uvaal Singh from Sasfin Wealth.